Hello and morning and welcome Matt to Tree Law TV Live.
Hi Sarah, thanks for having me on to chat.
No problem. This is, I feel like a bit of a data geek here because this is a topic which I'm really excited to get cracking and talk about today. So before I launch into some questions and we have our chat, do you want to just introduce yourself a little bit more to the viewers who may not know who you are?
Yeah, sure. So I'm Matt Scott, the co-founder of Insurance Datalab. We're a new benchmarking and insight service for the insurance industry, focusing on the performance of companies in UKGI essentially.
And Matt, what did you do then before your business? Because it's quite new as a business, isn't it?
Yeah, so we launched kind of summer 21 essentially, and had a bit of a varied background before that. So I started off actually at Aon, but in their pensions team, I was training to be an actuary. So I did a few of the professional exams, Masters in Actuarial Finance at Imperial. And then I'll be honest, I decided that what felt like being stuck 24/7 behind a spreadsheet wasn't the career for me. So I ended up leaving that and retrained as a journalist. So I did a course down at the Press Association, and then I ended up at Insurance Times. So I was an insurance journalist for, must have been around 10 years before kind of moving into Insurance Datalab. So I headed up a lot of the research at Insurance Times, things like the top 50 insurers, top 50 brokers, and a lot of claims analysis. And that's really where I suppose the idea was born for Insurance Datalab. So I was having trouble getting hold of a lot of the data that we now host. And then that kind of over time came into the Insurance Datalab, I suppose, business that we've launched today and that we're running now with my co-founder, Dan King. And it's come from there, really.
Fab. Well, should we share with the viewers your short video on Insurance Datalab? Because I think
that'd be great.
That video says a lot. So I'll share that now. So do you want to say anything then about your intro video? So what that's tempting potential customers to do, really?
Yeah, sure. So I suppose with that video, we just wanted to give a bit of a taster for the types of data we have on Insurance Datalab, as well as how it's kind of put together on our data platform with the chart comparisons and the data table downloads as well. So we've got a variety of different data sets covering everything from insurer underwriting and solvency, broken down by business line on the underwriting side, and then broker and MGA financial performance as well. And that's covering every UK and Gibraltar-based insurer and a non-life insurer. And we're adding Ireland to that soon as well as all of the non-life Lloyd's syndicates. And then we've got around 350 of the largest brokers and MGAs in the UK as well. And then as well as that financial side of things, we wanted to give a bit more than just a kind of a financial view and make it a bit more holistic. And particularly with the emphasis consumer duty and fair value is having on the customer. So we've got a load of customer experience metrics as well. Some of them are from partners from the likes of Insurance Times and their 5-star survey results, and Fairer Finance as well, looking at some of their ratings there. And then we also have a lot of complaints handling data as well as Trustpilot reviews. So on the complaints side of things, I think that's really interesting because we've got a lot of data there around how insurers are handling their claims in terms of the ombudsman view, whether they're upheld, volume of complaints, and also data from that's broken down as well by complaint type. So you can really drill down into whether you're looking at there's an issue with how you're handling your claims complaints, for example, or whether it's to do with sales and advice or admin. And then we also give a bit more context with the FCA data around how long it's taken insurers internally to deal with these claims, as well as maybe the volume in the context of the size of the business. So we've got some really interesting measures there around complaints per 1,000 policies in force, so that I can give a real idea of how the different size insurers or the different size brokers are faring compared to others in the market. Because it was really important for us that I suppose we could help these insurance companies position themselves in the market relative to their peers, so they can really see, I suppose, what good looks like, and maybe on the customer experience side of things, get ahead of things before if things are in a bad position, the regulator comes knocking or something like that. We really wanted to give them the view of how they're performing relative to their peers, essentially. And that video just gives a bit of a taster as what we have, as well as showing off some of the reports and kind of wider analysis we do as well.
Shall I share you've shared with me a couple of
Yeah.
graphs of data. Shall I share one of them and perhaps you can talk us through? I'll share.
Yeah, that'd be great. I think this is the complaint stuff. Yeah, so this is some of our data from the Financial Ombudsman Service. So this is looking at the 5 most complained about products in UKGI over the last 4 years. And what's really interesting here is, if you look at the middle of the chart, kind of 2020, you can see the real spike of the COVID pandemic, particularly in travel insurance. So it shot up massively there. So kind of just over 2,500 travel insurance complaints in, I think it's that third quarter of 2020. And that was a real struggle for the industry. Obviously, there was a wave of complaints where these people were having issues with their travel insurance in the face of cancellations for the pandemic, that kind of thing. So it's really interesting seeing that. And then the slightly more delayed kind of peaks on the likes of motor insurance, for example, there, and a little bit on the buildings insurance side as well, and even home emergency cover. But if you take kind of that, I suppose, COVID spike out of it, the thing that really kind of struck me was around how actually pretty much across all of these products and across the board, you see it in most of the product lines as well, so those complaints have started to creep back up again. And actually now, pretty much all of these, 5 lines you're seeing here, so motor insurance at the top with almost a third of overall claims, that's gone back above pre-pandemic levels. So if you look back at Q3 2019, which was the final Q3 ahead of the pandemic, the levels we saw in Q3 2022 last year have actually crept back up above that level again. And that's a worrying sign for the industry, I'd say. And the big issue in terms of volume of complaints is around claims. So again, around a third of all complaints relate to the claims experience. I suppose it shouldn't be too surprising. That's kind of, I suppose, where insurance proves itself. It's where they have to give good on the promise that they've made to their insureds. And that's a bit of a problem area for some, and I think insurers need to take a look at that. If you look at the next slide as well, we've got a lot of information here around the upheld rates. And while volumes have been kind of creeping up again, the good news, and it's a bit more reassuring for the industry, is that the upheld rates have actually come back down, and most of them are now below those pre-pandemic levels. Obviously, again, you can see a big spike here, kind of in 2021, bit of a lag on the complaints being closed by the Ombudsman. But this is essentially showing that the percentage of complaints upheld in favour of the customer by the Ombudsman, the FOS. So showing essentially where the Ombudsman thinks insurers, brokers are getting their decisions wrong in terms of how they handle their complaints. So it is great news that these complaints have come back down, both from the COVID spike and also from the pre-pandemic levels. But we're seeing that across most lines. It's still having 25% plus being found in favour of the customer, which kind of we think that's too high. We think insurers need to do more to help bring that down. And we are seeing some insurers who have really turned things around, going from almost 45% upheld rates back down to, kind of 15, 20. And that's great to see. but there's still more to be done kind of across the industry to get that better.
I listened to you and your colleague Dan doing that presentation at, was it FinTech Live? I don't want to get it wrong, but it was on your YouTube.
It was, yeah, FinTech Live last year.
Yeah, and in that you were talking about I've lost my train of thought there. What were you talking about? You were talking that's it. You were talking about the expectation gap.
Yeah.
So, you know, insurance is a contract. It's a contract of insurance between the insurer and the insured. And obviously, as a solicitor, when I have clients that come to me and they're insured, obviously I only deal with clients in difficulties. And it really is very obvious to me about that expectation gap that you were talking about. So actually, when an individual enters into that contract of insurance, they just perhaps don't quite fully understand what's covered, what the contractual terms are. So I think I see that as a real issue.
Oh, absolutely. Yeah, it's a real big problem for the industry, and you get, even in the complaints where maybe they are found in favour of the insurer, so the customer has been found that they weren't covered, for example, if it was the claims complaint, then we still see that as actually being a problem for the insurer and for the insurance industry as a whole, because that customer obviously thought they were covered. They thought they could make a claim for example, wear and tear on a property insurance claim, which is never covered by an insurance policy. But if the insured thinks it is, and they think that's what they've bought, when they come to make that claim, it's, for one, a terrible customer experience because they're not getting what they expect from the product. It's bad from a loyalty point of view because they're probably going to take their business elsewhere, even though in terms of processing the claim, the insurer's actually probably not doing anything wrong. That can then lead into a wider problem if they're telling friends and family. They probably wouldn't end up telling them that, it wasn't something that should be covered. They just tell them that the insurer refused to pay their claim. So there's a kind of a reputational issue there, in kind of terms of the market and their potential customers. But also from an insurer point of view, it's a waste of time and it's a waste of money. So they're, losing out on a few different areas: bad customer experience, potential lost customers, and then increased costs as well. So closing that expectation gap is a real problem, and we think could actually deliver great results on kind of multiple levels in terms of financials and customer experience. And it's an area that we think the regulator's going to be looking at as well. So we know they've released their value measures now, looking at claims acceptance rates, average payouts, and things like that. And that's something that we're going to be putting on the hub soon as well. And they're going to be looking at these things, and the insurers that aren't getting it right and are having problems with the expectations of their customers could be in real trouble down the line. And it is a tough one to solve. Lots of insurers are trying to get people through, particularly in personal lines, through the quote process as quick as they can, as few questions as possible. And that potentially at the front end gives a great customer experience because, it reduces the time, reduces the hassle of getting a quote. But it could be creating further problems down the line in terms of this expectation gap, where policies aren't particularly explained, and people don't know what they're buying. It's
difficult because an insurance policy is, it's a huge contract. There's loads of terms and conditions in there. To explain all of those to somebody so that they totally understand them, if X, Y, and Z were to happen, then we would do this. There is so much in there to explain. It feels almost an impossible task. As a lawyer, there are people, there are lawyers that specialize in contractual disputes around insurance policies. There's enough of an insurance policy to have that sort of contractual dispute lawyer to lawyer. So to expect a layperson to understand all of those as they're entering into the contract is...
I think there are, I suppose, ways of approaching the problem. And I think kind of technology can play a big part in terms of data enrichment, so that some of the obvious data that you can pull from third parties is already pre-populated within a quote form, for example, in a question set. And that can then free up time to almost slow down the process elsewhere to be able to explain what is and isn't covered a bit more clearly. And I think insurers need to take that time. It might be a bit counterintuitive with what a lot of them are doing, trying to speed everything up. But if you can speed up certain areas and then slow down elsewhere to really explain what's included, as you say, it is still hard. But I think sometimes the jargon that's still in some of these policy wordings are just a nightmare for people outside of the industry to understand.
Yeah.
And I think, that needs to be looked at. And Fair Finance do a lot of work around that, around the transparency of policy wordings, and that feeds into some of the data that we have on our platform. And stuff like that. I think the industry needs to engage that side of things to make these policy wordings more understandable, but also to explain more clearly outside of the policy wordings what is and isn't covered. And I think more work needs to be done on the likes of the price comparison websites as well.
Yeah.
I've gone through buying my car insurance, for example, and I've said I want particular things to be included. And then when it comes up with the list of things at the end, those things aren't always in there. And that's a problem. Because if you're not looking at it properly, you could think what you ticked as necessity is going to be in all of the quotes you get, and it's not always. So I think that, other people, it's not just on the direct insurers and the kind of the brokers. Sometimes it's these kind of distributors as well that need to do more to help explain these policies.
So what sort of clients are you getting in then to your business? Who wants to use this data? I mean, I had a 7-day trial for the data just before Christmas, and I know it makes me sound like a total geek, but I absolutely loved it. And I was just geeking out on the data, doing loads of different searches, finding loads of different trends, asking questions. Yeah, I loved it. But apart from me geeking out, what sort of clients are you getting into the business?
Yeah, so I love geeking out because although I said at the beginning I got fed up with spreadsheets, I'm back in them now. But when it's building it for yourself and doing kind of all of this for your own business, it's a lot more enjoyable. But yeah, in terms of our customers, so it's across a range of kind of, I suppose, the value chain. So we work with insurers, brokers, and MGAs, and we're in talks with kind of people outside that in terms of technology providers and kind of the investment community as well. So if we look at insurers, it's kind of all the way from kind of small startups that haven't launched yet that we've worked with, all the way up to some of, the big named insurers that, kind of you hear kind of across the globe. So it's a real range, and we work with them in different ways. So some of them, it's kind of, they get a login and then they go in and they look at data for their monthly MI or their quarterly reporting. So that could be feeding into the finance team in terms of, benchmarking their kind of loss ratio, for example, or their solvency position, their capital management. So we've got some clients using it for that, or just seeing how they fit against their peers, or potentially new markets they might want to move into. So if you're kind of in motor insurance wanting to move into property, for example, you can see how the different property insurers are performing and see if that's an opportunity you see as worthwhile. And we're getting increasingly on the insurer and the broker side, the kind of the customer experience data is becoming more important. So from the insurer side, it could be looking at either how you're comparing to your peers, or which distributors you might want to work with to, brokers to distribute your products, or potentially MGAs to work with based on how their financials are doing or how their customer experience is performing as well. And then with the brokers we work with, it's really looking at which insurers you want to partner with for your products in terms of, where they're giving good customer service. You might be able to recommend a policy, for example, that's maybe a bit of a higher premium, but it's going to deliver more of a premium experience for your customers. So that's really useful. And also on the kind of the acquisition side of things, we're increasingly speaking to people about how they can use it to do a bit of kind of early level due diligence or early level scouting of the market to see which companies might be potential for acquisition. So we do a load of reports where we rate these companies. So we do insurer underwriting, brokers, broker performance, and MGA performance, and that gives kind of our own ratings based on what we see as the key metrics across those areas for financial performance. And we're potentially looking at we do a customer experience report, and we're looking at making that wider as well to bring some of those more metrics in. But on the financial side of things, we look at a sustainable performance and then give a percentage score for each of the companies on our platform. And that's really a good initial look at how a company's performing from a financial perspective. And then from that, we're seeing people kind of go deeper into the data and look more at, on a broker, for example, look at the P&L and the balance sheet and see how they're performing over the last kind of 3, 4, 5 years.
I think I picked up one of your reports. I think I've got it behind me here. Have I?
Oh yeah, from the property conference.
I gotta get it now.
Yeah, that's the customer experience one, I think.
So are these available for people that don't have access to the dashboard? Are these publicly available?
Yeah, so they can all be downloaded on our website. So there's a little kind of form to fill in with your details, and then we can send over a PDF version. Some of them are abridged reports, and all of the full reports then are available to our subscribers. So that CX one there is the full report. And yeah, that looks that's I believe the second one where we updated it, and we're looking at a few different pillars now. So the likes of claims, transparency, customer experience, that kind of thing, and complaints handling as well.
Are you finding that insurers are welcoming this sort of benchmarking against one another? Because obviously, I think when I spoke to you initially, I think it was either you or Dan, and you said that none of this is data that the insurers themselves are giving to you. This is data.
No, yeah.
Yeah, so you're sort of doing it regardless of whether the insurers.
Yeah, so it's all data that we're going out and sourcing, whether that's through partnerships with other kind of data holders, like Insurance Times, Fair Finance, Consumer Intelligence, or kind of publicly available, or through things like freedom of information requests. So we're not relying on anyone giving us their data. We very much wanted it to be that we're getting this data for ourselves, and then you can compare apples for apples. And we were some people said kind of at the start that this could lead people to sit up and think, well, what are they doing, what are they going to find? But we've actually found that the response across the market has been really positive. They see us, I think, for what we want to do, and we want to help the industry improve itself. We're not about picking out the kind of the people who maybe not be performing in line with the market, might be a bit low performance. We're not about finding them and naming and shaming. We're about helping companies who are engaging with us to see their data, see how it's performing, and then helping them to improve their performance and also improve, the kind of the experience and performance across the industry as well. We really want to help the industry with what they're doing. And when we were sitting down and before we launched the business, one of the things Dan and I were really keen on was helping the industry to improve transparency across the board. So with this data, we're putting it all out there, and we really want to get the kind of the analysis and the insight out to the market to help the industry improve, and I suppose improve the experience for themselves within the industry, whether it be the employees, the staff, the company itself, and also for the end customer as well.
I don't know, like I would say over the last 6 months, I feel like I've noticed a change in household insurers. I can only talk for household insurers, perhaps being a little bit more risk averse. I'm having quite a few conversations with people, and again, the numbers of these conversations aren't huge, so this could be anomalous. But I'm having conversations with people who were fine and had insurance cover in respect to their property, but their insurer, the same insurer, may now perhaps feel too nervous and feel that the risk is unacceptable and are now pulling out. So I had one client, she'd had continuous insurance with one insurance company. She'd had a subsidence claim that they'd dealt with. It was dealt with and solved. That was quite some time in the past. Nothing else had changed. And she got to this year to renew her policy and they wouldn't cover her. So then she had to go back out to the market and get insurance, and she did. But I feel like I'm noticing more of an risk averse attitude.
Yeah, I'd say that's fair. I mean, insurers got a big hit at the reinsurance renewal date in January. That was cost of reinsurance gone through the roof, and it's I suppose that kind of inflationary pressure they're feeling it across the board. Motor insurance, for example, some people are expecting double-digit claims inflation, which is huge. In the property market, you've got not only parts going up, but also labour is going up massively as well. There's a big labour shortage, across the metropolitan network. Insurers are feeling that labour shortage as well. So I think the problem is everything's getting more expensive, and on the claims side of things in particular, when those claims go up, there's a couple of things that can happen. Prices follow suit, which I think is going to happen as well, and already is happening to a degree. And then risk appetites get pared back as well, and insurers are more selective around the risks they're writing, the areas they want to focus on. And that is going to be a challenge for the market, but we always say, well, there's a challenge, there's also opportunity, and I think there's some really good things that could come out of this as well in terms of product innovation. So I think embedded insurance has been around for a while and there's been talked about for quite a while, but I think that's really going to take off.
Embedded insurance. So are you thinking about that for like motor or?
So this is where, for example, you might embed a travel insurance policy into your bank account.
Oh,
So
right,
that is within another product. And that is great in a number of ways. For the insurers, it's reduced costs of distribution often, and there's a real kind of engaged target market with this other product, where they can then tap into that user journey, which is often really slick, really easy, and feed into what's already a bit of a captivated audience. And then claims are handled in that same channel as well, so it can often be a much lower cost base. And from the customer point of view, then again, you get that great user experience. You're buying multiple products from one provider, so you don't have to go kind of shopping around the market, and it takes a lot of the legwork out of things. And I see that as a big thing, particularly in personal lines and maybe SME as well. And then the other big thing that I think could come to the fore is parametric insurance as well. So with kind of rising costs and people may be having trouble getting cover, flood insurance is a great example of this, by the way, like the flood flash.
Yeah.
You can, so it's where a policy is triggered when a particular event happens. So in flooding, if you have flood water in a certain height, instead of then having to phone up your insurer, make a claim, wait for the adjuster to come out, and then wait for, go through the whole repair and restore process, it can be a near instantaneous cash payout from the insurer, which then you can go and put yourself back, get the workers in and deal with that claim yourself. And for the right people, that's a great experience because they know they're buying a cash payout rather than being put back to the position where they were. It's so quick. It can often get cover where cover may not have been affordable before. And for the insurer, it's the cost of processing those claims, it reduces pretty much to nil. Because once that triggers event, you make the payout, you don't have any of the rest of the claims processing. And I think that could make a real play, particularly in the commercial lines market. Or, real in the flood area, real kind of flood hit areas could benefit from that. And I think we'll see more of that now that costs are going up. You could see more of that stuff to make insurance more affordable.
So my specialism is subsidence, claims, and obviously they peaked. There was a surge event last summer because of the hot summer, and hot dry summers look to be a thing of the future. And there's been mention about whether a level of parametric insurance might be introduced for subsidence claims. I'm keeping my mind open to that, but so far I've only heard it in relation to flood claims.
Yeah, I think it's introducing the travel space a bit as well in terms of kind of delays and lost baggage, a few things like that. And I think people are working on things that I think will build it out into wider areas. I think the problem is it needs to be explained right. So you need to make people aware that they are not buying a claim service like they would with a normal insurance product, where they'll send out the builder to put right your kitchen after a fire, for example, or they'll come out and sort your subsidence. It's very much a different experience with that cash payout, and people need to be made aware of that. And that could be an issue if it's not sold in the right way. But explained right, I think it could be a great product and a great customer experience for the right type of customer.
So that expectation gap again, then making sure that there isn't
exactly,
there. Great. Well, we're coming to the end of our 30 minutes. It just absolutely flies by, doesn't it?
No, I've loved it. It's been great. Yeah.
If anybody wants to have a look at your website then, or interested in a 7-day trial, can they? Is that available?
Absolutely, yeah. InsuranceDataLab.com and InsuranceDataLab.com/trial to come to the trial. Reach out to me on LinkedIn. So yeah, either way, you can get in touch and set you up with a demo, a trial. You can see our reports, all that kind of stuff. And we've got a blog with loads of insights and analysis of our data on as well.
And quickly, before we go, I think, we're just hitting the 30 minutes, but let's see if we can get another minute in. What do you see coming on the immediate horizon? What trends are you seeing coming down the road?
Yeah, so the big one's regulation. That's going to be the big focus for everyone this year. I know Consumer Duty and Fair Value, they've been out for a while. Don't think people have fully got to grips with it yet. So the regulator was quite light on guidance, and we're expecting the next round to to be maybe a bit more guidance heavy, a bit more help on what's needed. And I think this is the year that the industry really needs to get grips with that. And that's the big one for us. And then how that impacts on the customer experience and how the insurance goes about doing its business. That's the big one for us. And that's where we're kind of putting a lot of focus on what we're doing as well. In terms of new data running around kind of fair value, that kind of stuff. That's the big push for us this year, I'd say.
Great. Well, it's really interesting to chat to you. As you know, I'm a raving fan of your data. I absolutely loved my 7-day trial, and I would definitely encourage anybody who hasn't seen the business to check you guys out and have a look at your data. It's incredibly interesting.
Well, thanks. Glad you found it useful. Yeah, great to see you again, Sarah.
Yeah, and you. Thanks very much, Matt.
Take care. Thanks.
Bye.
Bye.